Stocks are hit with unprecedented selling. However, stocks are moderately oversold currently. We have observed a bearish divergence between junk debt and stocks for a few days now, and I have notified my subscribers about this. The 10-year Treasury note yield went down pretty significantly and could be headed even lower towards the 3.85% area. I will explain why I came to that conclusion. Silver and gold look toppy, and gold miners as well. Dollar especially seems to be breaking out, and this could weigh on precious metals, which are insanely overbought. And oil likely to retest mid-50s dollar range as it collapses. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, October 10th, 2025. As always, please don't forget to like, share, comment, or even put a thumbs up or a heart in the comment section. This would make the algorithm for YouTube think that this video is important and share it with others. Thank you for those actions. And if you are a subscriber, stay tuned. We have a moderately heavy a video for members only today, so stay tuned. Not much as far as buying is concerned, but there could be stuff as far as selling is concerned, so stay tuned. As always, I'll be using my proprietary MasterChartsTrading.com price action indicators, for which you can sign up on Master Charts Trading. They're on this chart, this green, blue, red, and yellow lines. Let's get started. So, what a day. Just visually, you can see that this gigantic candlestick, a red candlestick from today, is definitely unprecedented as far as this period is concerned between the April of this year and today. So, you can see that we had pretty large candlesticks here, in this one on April 4th, another one here on April 8th, and then just absolutely insanely large green candlestick on April 9th. That's when President Trump decided that tariffs will not be a big deal. But right now, all of a sudden, we have a new salvo of this trade war with China and the rest of the world, and we have this giant red candlestick. So it's a very big, very red. We will look at it in more details. So notice how big and red it is. So what does that mean? That means that we opened in the morning here. Sometime throughout the day we actually rose a little bit, but then we just completely collapsed, and the selling was pretty much non-stop until the very end of the day. So there's a tiny little bit of a shadow at the bottom here, but by and large there was non-stop selling throughout the day. We can also look at this on a 5-minute chart. I'm going to turn off the indicators for a second. And there it is, just non-stop selling pretty much. And we closed pretty much near the lows of the day. What does that mean? From a technical perspective, which this blog is all about, this is not a good sign. But you have to think about it in the context of recent price action, of this year's price action. So from April lows until very recently, we rose almost 40%. So by any means possible, this chart was definitely overbought. It was so overbought that we have gaps, unfilled gaps, gap up, from actually 3 of them that I can see on this chart, possibly more, but they're pretty much all filled. But these 3 unfilled gaps, they are going to act as attractant for the price. Namely, this gap between 23rd and 24th of June. There it is at around 6,000. Notice that this blue support resistance line is right around that area. So notice that's just right around that area. That is going to act as a attractant for the price action. We can also turn on the exponential moving average and make it 200. So 200-day exponential moving average is one of those useful indicators. I don't personally use them. You can see that my indicators are not using moving averages, but notice that the 200-day exponential moving average is also right around that area. So we're looking at this 6,000 to 6,100 area, which could become a very good place for the price to go to, which is around another 8% from today's price levels. Will it actually happen? Well, the word unprecedented has been thrown around, a lot since the elections, or even before the elections. So, looking at this chart, again, since April, this large red candlestick is unprecedented. We can also look at several other parameters here. So I mentioned that stocks are moderately oversold. Where am I getting this? I will show you. Okay, so two ways to do this. We can look at 4-hour chart. Okay, so 4-hour chart is you need to use what's called a continuous security. So this continuous security is this ticker symbol US 500 from Capital Com. I don't like to use not continuous security, for example, like SPX, because there are gaps. And then 4-hour chart, you need to see the entire picture. So looking at this 4-hour chart, and looking at recent history, we can see that the last time, notice we touched the blue line, one before that was in April, and then one more time right there in August of this year, we touched the blue line. Actually, then one more time right there in September. I'm gonna put a candle, an arrow there in September of this year. But this time we actually blew right through it. We can see that this is today. So this is from 6 in the morning. I'm in California, and this is from 10 in the afternoon. Two giant candlesticks. On daily candlestick, it looks like one giant red candlestick. But intraday, this is a 4-hour chart. Each candlestick is 4 hours worth of activity. We can see that we blew right through this blue support resistance line. We didn't even stop there for a second. So again, remember, this is a 4-hour chart. So I'm going to zoom in a little bit now to the current price, and notice that how convenient we see that this red support resistance line has acted as support, and we touched this line and stopped. So again, my indicators, they're not just there, because I decided to make them up in a certain parameters. They're actually there because the robots see them, the institutions see them, the people who trade professionally see these lines as well. So notice what happened here. We landed on this red support resistance line. Now, again, this is a 4-hour chart. So for short term, we are toying with bearish levels. Short term on 4-hour charts would imply a few weeks to, maybe a month or so. So for example, this was a September candlestick, exactly about a month ago. So This period here encompasses about a month. So if we indeed break down below this red support resistance line, there most likely will be a short-term bounce. But if we close below it, then short-term direction is down. And we can trade this on a 4-hour chart, but it is inconvenient. You know, people don't normally, you know, are up in the middle of the night to trade this stuff. So we need to look at daily charts. So currently we're around the red line on the short-term charts, but we can look also on the daily chart, and we can see that we're way overextended. So if we say that we're somewhere, you know, between the blue and the red line, like in the middle here, is like quote unquote the middle of the price action, we can see we're very overextended because we made all-time highs here. Down below here, back in April, we were overextended in the opposite direction. Okay, so the first support that I see is this green support resistance line, which is at around 6,440. On the 4-hour chart, this would be around the yellow line. So I think that it is very likely we will do something as follows. Next week we might get a tiny little bounce, but I think we will get down below to this 6,400 area by the maybe on Thursday or Friday of next week. So on the daily chart, this would look like we're going to touch this green support resistance line. So this is the first support, and very often this would be it. You know, we'll just stop there. But because of the nature of this latest candlestick, I don't think this is going to happen. So we can see that this latest candlestick is, you know, very big and very red, and there's really no support at the bottom of it, so to speak. So if we're going to duplicate the same candlestick to the downside, we are most likely going to break below this green support resistance line towards around 6,300. So again, we can look now at the 4-hour chart. So most likely, again, we're going to continue towards like maybe into mid to late October towards like this area. So very likely short term we are in a short term bear market. This is a 4-hour chart again, remember, so we're measuring weeks to maybe a month or so. Long term, the market is definitely in the bull phase, and we're nowhere near a true bear market yet. So to become a true bear market, once again, we need to do like what we did right there where I'm hovering on 4th of April. We broke below the yellow line. Okay, to do that, we need to collapse another 20% from today's price levels. Can it happen? Remember, unprecedented. So things can change very quickly. And again, because of this 3 unfilled gaps, this would continue to act as price attractant. So yes, it's not impossible, but to time it is difficult. So right this instant, it looks to me like we're gonna do doing what I just described. We might get a small bounce early next week, and unless we come back above this blue line at around 6,600, I think the bigger direction would be down. So maybe a short-term bounce, and again, unless we get above this blue line, I think we will break towards like 6,300 area. Okay, so that was unprecedented selling, and stocks are moderately oversold. So let me explain why I think they're moderately oversold. So we haven't, you know, I just showed it to you on the price action charts. Now I want I wanted to show this to you on the market breadth chart. So this is a 10-day exponential moving average of the advanced decline line. So you can find out more if you go to stock charts. You can actually learn what is advanced decline line. Very briefly, advanced decline line is the number of stocks going up, advances. Subtracted from that number is a number of declining stocks. Each day we get a point, and then we do an average, and do a 10-day exponential moving average of that point, and we get this oscillator. So it oscillates between 0 plus, like maybe 1,000 and minus maybe like 1,000. It's very unusual for them to go, to those deep levels. So notice here where I'm hovering on April, where, when we had that complete freakout, tariff freakout in early April, the advanced decline line, this 10-day exponential moving average, went as low as minus 900 or so. So it was extremely deeply oversold. And at that point, we could pretty much blindly buy. Now, we got moderately oversold readings currently. In fact, they are, moderately to severely oversold. Not yet into like deeply oversold area, but pretty strongly oversold currently. So I would call this moderately oversold. And we had something similar where I'm hovering on August. We got to that minus 400 area, minus 500 area or so. And then we just bounced. But again, because of the nature of this giant candlestick, I think this time is different. Oh boy, I just said it. This time is different. So again, unless early next week we just reverse it and close above the blue line, which is about 6,600 here on the 4-hour chart. So if we close above 6,600, which is like right there, we can just negate it. But if we don't, I think the bigger direction is down. And we, at that point, if we continue like towards where I said, like 6,300, we will become severely or deeply oversold, similar to this area in April of last year, of this year. So if that happens, we can again potentially blindly buy and just say, okay, because the advanced decline line is so deeply oversold, the bounce is extremely likely. Put a comment into the video. Let me know if what I just explained resonated with you. Do you agree with it? Do you see a different projection? I'd love to hear from you, so please make a comment there. Okay, so another thing that I wanted to point out about stocks is the high yield bonds. So junk debt, ticker symbol JNK. So junk debt made a record on September 23rd, where I'm hovering right there. And since then, there was no new records. And in fact, we made a lower high on the 2nd of October and continued lower. And then, today we also sold off. So this is a bearish divergence. We see that junk debt, high yield bonds are moving lower, while stocks continued to make records. So that's September 23rd where I'm hovering. We continued to make records until yesterday, and only today collapsed. So this was a bearish divergence, which I pointed out to my subscribers. It is very difficult to act upon a bearish divergence, but I already at that point was saying that it is present. So we need to be potentially prepared for a move down, and we got it. So classic flight to safety. We have high yield bonds being sold, GNK, stocks being sold, Treasury bonds being bought, TLT. So I actually personally bought TLT a few days ago. I'm in the plus right now. Why did I buy it? I did not buy it because of the intermarket analysis which I described. During the times of stress, treasury bonds are bought. No, I bought it because this particular security, TLT, broke above my blue support resistance line right there on 2nd of October, where I'm hovering, and I just went ahead and I bought it. and it happened to be correct because now we have today we have particularly strong gain. We have 1.6% gain for TLT, and this is a classic flight to safety. When stocks are sold, bonds, treasury bonds, high quality treasury bonds are being bought. If bonds are being bought, treasury yield and with it other things such as mortgages, car loans, and other things like credit card loans are tied to 10-year treasury note yield. They are going down. Their interest rate is going down, and there was big talk about this. President Trump wanted Federal Reserve Jerome Powell to lower the interest rates. Jerome Powell refused immediately, but probably regretted it later on. Now, the market is already doing it. There is no need for Federal Reserve to intervene. They already intervened. They did lower it by 0.25%. Most likely they're going to lower it another 0.25% next meeting. But the market is already doing it. So notice what happened here. We broke below this red support resistance line on 8th of September, which was at around 4%, 4.05% or so. So that already told me that at that point, the the interest rates are already going down. We got a short-term bounce, which I actually also predicted, and now again we broke below this red support resistance line and made another attempt to go lower. So we are currently, I'm going to zoom in, we're currently about to retest this yellow support resistance line, which is basically the last line of defense, and most likely we will break below it. So once we broke below this, we'll break below this yellow line. The door is open towards, significant movement down. So very obvious support level is this low from April 4th. By the way, that's exactly when we had those freak out from tariffs, initial freak out, and we will most likely retest that area. I don't know if it's going to hold, but it doesn't look good, honestly. So I think we will continue lower. So next support level will be around 3.6%. But I think reasonably we can expect interest rates to stabilize somewhere around 3.8 or so, 3.85 for the 10-year Treasury note yield. So we're looking at continuation of the move for bonds. Bonds most likely will continue higher. Whether or not this implies that stocks will continue lower, there is no way to tell. So I think I usually take different markets in a vacuum, like separately from one another. All right, let's switch gears. I'm spending a lot of time here today looking at dollar currency index. So dollar currency index until since April again of this year has been in a downtrend. Made a new low here in July and another low here in September, but rallied since then and was able to close above the blue line on Wednesday, 8th of October, just a few days ago. So I think we are seeing an honest to goodness breakout. And I think we will continue, at the very least, we will continue towards this red support resistance line. We're currently at around 98, so we're most likely going to continue towards 101. Dollar moving higher implies that precious metals are going to be under pressure. So this is gold going to the moon at $4,000. I'm seeing, what do you call it? Wall Street Journal, already saying gold climbed back above. Go back here. Gold climbed back above 4,000. So when I'm seeing such articles in Wall Street Journal, I am ready to run away. So it does look like it's very likely we're tapping for gold. This is also silver here, so on silver I can see 2 tapping candles, well, 1 at the very least. But actually today's candle is also not great. So notice this giant shadow out of the top here for 9th of October, and today also pretty large shadow out of the top here for silver. Silver is pretty volatile, but I'm thinking that this is it. Maybe we'll make a marginal new high, but I doubt we'll continue higher. Gold miners in particular, of course, are much more susceptible to speculation and to movement. Like yesterday's candlestick was very large. It was like 5% move. Previous, obviously, we were trading gold miners to the upside. Notice this upward facing arrows, so no problem there. I was already saying that we might be tapping back in the September, late September. Now it sure looks like we have tapped. It looks extremely overextended. I mean, even this last move was 74%. It's a very large move, since May of this year. So a pullback for gold miners, gold and silver is quite likely. Again, notice that first support is at the green line, so around 4%. Most likely we'll kind of get down to the green line, maybe have a shallow bounce, and then maybe make another leg down. If we don't suddenly make another record, most likely a pullback towards the blue line, which is around 18% from today's price levels, will unfold. We will need to reevaluate at that point if we will see something similar to what we saw here in April and again in May. Do we want to be buying this pullback, or do we want to be doing nothing to this pullback? This will all depend on the dollar. If the dollar continues to strengthen, and I think it will strengthen at the very least towards the red line here, so another 2 to 3% up, then and especially if we break above this level and kind of keep going, we might actually get to the blue line, another 6% from today's price levels. Then at that point I will definitely not want to be buying gold, okay, or gold miners. So it all depends on the dollar. Again, I want to hear your opinion, so please make a comment in the comment section. And to wrap things up, we're currently looking at crude oil. So notice that downward facing arrows since June of this year. Actual alert right there on 6th of August, and finally it took a while from August till now. It took a while to finally for gold to break where it's supposed, where it should have gone a while back, towards below this yellow line. So if we look on the more longer term time frame, so here is the weekly time frame. Notice this lows for oil here in April, like in the mid 50s. It is very likely we will touch them. I mean, like within weeks, days to weeks. So if we don't hold those levels, then we could actually see oil in the 40s. And I already mentioned this on multiple occasions. So we need to break below this April lows from this year, 2025, and it could just collapse into the 40s. In that case, places like Russia would be under severe stress. All right, what do you guys think? Let me know. Make a comment in the comment section. Head over to MasterChartsTrading.com. Click on sign up for one of the products. So again, these indicators are only $24.95 per month if you buy a yearly subscription, $29.95 per month if you buy monthly subscription. I think they're indispensable to trading. So give them a try. I have 7 days free trial. if you don't like it, cancel it, no problem. But I think that you can make, you know, easy predictions. You can see the price levels, you can see where you want to be buying. You want to be buying around the blue line, you want to be selling short around the red line if you're trading intraday. You know, I have a explanation for everything. I have a tutorial, so if you're interested, sign up for that newsletter. So again, I send out daily alerts and weekly members only videos. This week we'll be covering all of these various securities, so various things like Bitcoin, some of the Forex, some of the natural gas, large cap stocks, small cap, and more speculative securities, as well as some of the psychedelic and cannabis securities as well. So that's newsletter, and the best deal, of course, is to get both trading indicators and newsletters, especially at the yearly subscription. You get 2 months off relative to your monthly subscription. That's it for this week's recap. Don't forget to hit the like button, subscribe to this channel, share this video, make a comment. Thank you for watching. Have another great trading week. Bye-bye.